Do think that that China wants its locals to win. We saw, I think, just in this week, NIO, because of the battery swap system it has. No matter what it's pricing its cars at, it's going to get subsidies, whereas the Model Y will not get subsidies in China. So there is some favoritism for locals.
Welcome back, friends, for one more update from the world of EV stocks. In case you're new to this channel, please do consider subscribing. And if you live in the United States, you can get 2 free shares worth up to $1,850 just by following the link in the description. Now enjoy the rest of the video.
Cathie Wood was on CNBC last night, and she answered a bunch of questions surrounding Tesla, and also made some interesting comments on NIO. Most of the growth stocks have taken a massive beating this year, and in these difficult times it's reassuring to listen to an investment veteran like Cathie. Let us listen into what she said.
Cathie, I wanted to talk Tesla, one of your favorite stocks, because that's part of the performance issue. It's off 25% from the highs. And there's some real questions right now about the reliance on autopilot and whether that has led to some deaths. You have been super bullish on Tesla's autonomous future and the vision of robo-taxis. Isn't that problematic, given some of the concerns here around safety?
Actually, I think we've gotten some very important information recently that Tesla is seeing its way through, so to speak, to autonomous, and that is they've decided to take radar out of the ecosystem and just depend on vision, computer vision, CV, so 8 cameras. I think they're getting much closer. And, you know, as far as autonomous, when anyone talks about safety in an autonomous vehicle, they have to consider the alternative. The alternative is human-driven travel. Humans are responsible for 80% plus of all fatalities in automobiles. And so autonomous is going to really take that issue away from us. So we think that we're much closer than most do. We think we're probably not as close as Tesla thinks it is. But we do think within the next 2 years, we're going to see some really surprising breakthroughs from Tesla. We've been watching Waymo and Cruise Automation here, and we think they're probably struggling with how to scale that business. We think Tesla is going to go autonomous at scale or much more quickly than any of its competitors.
And then there's the China issue. They seem to be really clashing with customers on social media, the public, and the government. What do you think is going on there, and how much of a risk factor is that for the stock and the business?
Well, we do think that that China wants its locals to win. We saw, I think, just in this week, NIO, because of the battery swap system it has, no matter what it's pricing its cars at, it's going to get subsidies, whereas the Model Y will not get subsidies in China. So there is some favoritism for locals. But we found something out very interesting this week. If you look at the drop in share of Tesla's cars in the electric vehicle space in China, what you will also see is an increase in the number of exports to Europe. And in talking to the company, we found it curious. And it seems that the quality of cars being built in China, in that super modern factory, the quality is much higher than those being built in Fremont. And we know that the European customer used to beautiful German cars is very particular about quality and design. And we think Texas will be a step up as well. So Fremont's just a very old plant. So it was very interesting to learn that. And so I think that Tesla will manage the issue you've identified and that many are discussing by exporting to the rest of the world. And I think China's going to like that. China has not been a big exporter of autos to the developed world. This will be a feather in their cap.
These are testing times for all growth stocks including NIO. and we believe the phase might continue for now. Another factor which we think might be contributing to the downturn is the boom in crypto market. A lot of fresh retail cash is moving into crypto in a complete mania, and stocks are missing out on that retail money right now. In any case, we believe this is just a passing phase, and those who wait it out, in a quality growth stock like NIO, will eventually see massive profits. Most of Cathie Wood's favorite stocks have also taken a massive beating this year, and she was asked by CNBC what she thinks of the whole situation at the moment.
Thanks so much for joining us.
Happy to be here, Wilfred. Thank you.
Let's touch, if we may, on this sort of current pullback. Do you actually welcome that as a long-term buying opportunity for a lot of the stocks you love, or are you feeling the heat a little bit?
Oh, I love this setup. The last time I was on, I think I said that this rotation was good news because it meant the bull market was broadening out. It was strengthening. And the worst thing that could have happened to us is to have the market narrowly focus on just our ilk of stock, the innovation space. Instead, it has broadened out so that year to date, I think it's energy's up 40%, financials are up 27%. And from the peak in mid-February, our strategies are down. The ones that have been hit the hardest, not all of them, are down 30 to 35%. I love that setup. We're at, from our point of view, 5-year time horizon, nothing has changed except the price, and therefore the return, which at the peak of the market and of our strategy in mid-February, we expected a compound annual rate of return of 15% on average per year from our strategies. Now that the prices are down, that number is somewhere in the 25 to 30% range.
You may love the setup, Cathie, but it hasn't been great for your business. I mean, worst start to the month on record. You've seen outflows of $1 billion. How are you managing these declines? And there's speculation out there that if the outflows continue, it would be hard to meet redemptions.
No, well, first of all, I don't have to worry about redemptions. ETFs, the ETF ecosystem is a beautiful thing for portfolio managers. I highly recommend it. So what that means is when I am making decisions, they are investment decisions. I have nothing to do with the flows. The ETF ecosystem, the authorized participants, the market makers outside of ARC, although of course we're overseeing their actions, they are facilitating our flows, and they're doing it in many ways with algorithms and derivatives. I think the ecosystem has become quite profitable for them. So we have experienced no problem. If you look at our spreads, there's been hardly a disturbance in our spreads. As far as flows, actually, we've been very gratified. I think if you go month by month now, this is endpoint to endpoint, we have not seen a month of redemptions yet. I would be... I don't want to say never. I mean, of course, we're going to get redemptions. And in fact, in the ETF structure, when we get redemptions, because of the in-kind nature of redemptions, we are able to offer a much more tax-efficient strategy or portfolio in this wrapper than we ever could have in a mutual fund.